Not long after the Strait of Hormuz was closed, at the start of the Middle East war, China went on a crude oil crash diet. Initially, China increased its purchases of crude oil. But around a month after the war started, Beijing switched tack. Between April and June, China cut its crude oil imports by a massive 40%. Crude prices did not spiral, and Beijing's actions acted as a shock absorber for the global economy. China's policy-led adjustments to domestic demand helped keep the market stable and probably averted a global recession. A bold statement that China is an oil fortress capable of reshaping the global order.
The really interesting part is that the main strategy that China deployed was actually managing demand. So, in other words, China reduced the amount of energy going into its actual economy. And there are a couple of different factors here. So part of this is through electrification. And China now puts massive amounts of electric vehicles on the roads. Over half of passenger vehicles sold are now electric, and about a quarter of trucks as well. The second piece was a policy response where China basically banned exports of refined products, including gasoline, jet fuel, diesel. And these are products that are coming from some of the state-owned refineries. So through that, China was basically able to slash the amount that those refineries were running and the amount of oil that they needed. But third, as part of that, China probably also cut the amount of refined products going into its domestic economy.
So we can see that demand destruction was key. China managed demand by putting masses of e-vehicles on the road, banning exports of gasoline and diesel, and cutting the amount of refined products going into its domestic economy. Following the Strait's closure in March, China drew down oil from pre-war stockpiles that were double the combined size of US and Japanese stockpiles. In fact, there were more than the US, Japan, Saudi Arabia and South Korea put together. An oil colossus. The story of how China amassed reserves big enough to change the global energy market is one of patience and ingenuity. Over the years, it became clear that China was consistently importing more oil than it actually refined and consumed when oil prices were low.
I've seen this escalating very massively in the year 2025, when it was clear that by all the numbers globally, there was more oil production than there was oil consumption. And therefore, many analysts expected prices to come under pressure and to fall much more than they actually did. And the question was, why did prices not come down much more massively if there's such an excess supply globally? And where did these barrels go? Where was the missing oil? And the answer was it was imported into China and put into storage.
Every time crude oil prices approached around $60 per barrel, China would be big buyers in the market. China is both the world's largest net oil importer and the country with the largest domestic storage in oil. That gives China incredible influence on the market, comparable to what producers like Saudi Arabia used to have.
Since the Iran war started in the second quarter of 2026, they have become much smaller importer than they used to be because they draw down on the strategic reserves. So that's the way they use them. Going forward, of course, the implication is that you can do all sorts of things with such a powerful position.
So now, spread across China, there are big tank farms, conventional tank farms in particular, in areas where along the coast where the refineries are. Increasingly, they're also stored in caverns. The scale of the slowdown in demand, which caught many traders and analysts off guard, turned out to be a critical factor that allowed the global economy to absorb the loss of over 13 million barrels per day of Middle Eastern exports. China's Communist Party leadership went through the gears. Policymakers tapped China's vast domestic reserves of coal and natural gas. They encouraged the use of renewables, where the country is less reliant on imports. And China took advantage of its giant fleet of electric vehicles. EV charging increased a lot more than the number of EVs in China. Companies and drivers simply started to rely more on electric vehicles. Despite much lower gasoline consumption, traffic congestion remained relatively stable.
Of course, a lot of the dramatic reduction of about 50% comes from drawing down stockpiles. But there is now evidence that reductions in transport, oil consumption are also playing a significant part. So the sales of gasoline, diesel and jet fuel fell by well over 10% in the second quarter of the year, which makes a major contribution. The factors that are enabling that are electric vehicles, public transportation, such as high-speed rail and urban rail, but also a lot of behavioral change.
Now let's take a look at electricity generation. China is the world's largest coal consumer. 54% of its energy to generate electricity came from coal last year. But this figure fell below half this year for the first time, and it's a lot less than 2011 when it was 80%. And renewable energy share topped 40% for the first time, while wind and solar was also strong. To understand why China is doing all of this, you need to understand the ruling Communist Party. Now, China is by far the world's largest energy consumer. The Chinese economic growth model relies heavily on exports. This puts enormous pressure on the ruling Communist Party to keep the machines running in the manufacturing sector. So securing energy supply is a top priority for the party.
A hugely political question. And I think, one of the factors that's often misunderstood is that a huge part of China's decarbonization drive and their climate strategy is really about energy security. And of course, this is because China is a net importer of fossil fuels, especially oil and gas, and there aren't significant domestic reserves of these fuels. So that's been a huge reason why China started investing in renewables early on.
Recent months have shown that China is far more in control of its oil consumption than previously thought. China is explicitly aiming for long-term energy self-sufficiency to insulate its economy from global market volatility and geopolitical shocks. According to data from the China National Petroleum Corporation, the country's domestic energy self-sufficiency rate is expected to reach 85% this year. Goldman Sachs forecasts that China will achieve full energy self-sufficiency by 2060, but it's not there yet.
China does have a degree of self-sufficiency, both because of the large clean energy sector and because of domestic coal and oil and gas production, but it remains highly reliant on imports for oil, especially, and that's why it has made this investment in stockpiling.
As far as its strengths go, China leads the world in producing critical minerals that are central to its energy security, and heavy investments in its energy grid are enabling China to prepare for a future powered by renewables. Also, the country's abundant supply of coal offers policymakers a safety net in the event of major disruptions to other energy sources. On the 1st of January 2025, China introduced an energy law that for the first time requires state-owned and private companies to establish strategic reserves of crude oil. It set the groundwork for a more coordinated stockpiling effort, and reserves began to swell quickly. Another major driver boosting oil security is China's need to hedge against sanctions. In a world where the US is levying sanctions and tariffs constantly, it seems like a prudent move. Before the Iran war, China bought at least 20% of its oil from countries under US sanctions, chiefly Iran, Russia and Venezuela. That figure is probably considerably higher as there is no official data on Russian oil imports, and many Iranian and Venezuelan barrels that arrive in China are rebranded as Malaysian. In 2025, China imported well over twice as much crude oil branded as Malaysian than Malaysia produces.
It is also, I think, a big motivator to blunt the sanctions weapon, which caused China to ratchet up its reserve so much, especially in the year 2025, in the very recent past, when it became clear that sanctions would multiply and that it has become an instrument of policy. I mean, this is unthinkable 10 years ago, the way in which sanctions are now handed out by the US government. And it's not surprising that other countries will react to that. And in China's situation, the most straightforward and prudent action they could take is to insulate themselves from the direct effect of sanctions. If you calculate the strategic reserve in China, it probably means that they have easily 150 days or more forward cover.
The Iran war has exposed how much of China's oil demand has been driven by stockpiling rather than consumption. While inventory buying could return as Middle Eastern supplies recover, analysts reckon that demand lost to electrification is unlikely to come back, potentially leaving China less able to absorb surplus barrels.
So what does that mean for global oil markets? It could mean that oil prices eventually have a lower floor. There's a much smaller market that OPEC is gearing toward, and so will impact their behavior. Of course, implications for the China-Russia relationship because Russia is so dependent in terms of exports to the China market. So lots of unanswered questions there, but certainly, a huge factor. I would say, in addition to that, if you're looking at China domestically, again, some of the recent plans reveal their strategy. So, I think we'll expect China to continue electrifying and also continuing to invest in some of these domestic production bases. At the same time, they're also investing in basically turning coal into liquid fuels. This is something that if those investments come online and ramp up significantly, it could have massive implications for climate because it's a very emissions intensive process basically to turn coal into synthetic fuels that replace oil and gas.
So when we think of Beijing's oil fortress, are we seeing a reshaping of the global order? For some, it's a chiseling away at the existing global situation as countries move to ensure stability in areas where the US has withdrawn. What does seem clear is that China is unlikely to go back to the way things were. We've witnessed demand destruction, the permanent loss of fossil fuel consumption driven by the oil colossus's rapid structural shift towards green technology and electrification.